Hey future millionaires, this is Phil from the Next Chapter team, and in this article review, we're going to review an article that highlights 8 financial tips for young adults to attack and address as soon as possible to put them on the right path to building wealth. Hope you enjoy the review. Please like, subscribe, and share, and drop a comment. Thank you so much, and enjoy the rest of the video. First up, the first tip that the article calls out is the getting in the habit of paying with cash and not credit. Exercising patience and self-control in your personal finances is paramount to building wealth over the long term. And what they're really getting at here is it's okay if you have to use a credit card in the event of emergency, but you should really be striving to stick with cash and not build up debt on credit cards, because those credit cards end up having a very high interest rate, sometimes between 19 and all the way up to 29%, depending on your state. The number 2 item is the importance of educating yourself. Educating yourself by reading some books on personal finance, or even basic investing. These are great ways to help get you armed and motivated to do the right things to help you build up wealth over the long term. In addition to that, you should strive to, if you can, start connecting with financial planners, even passively every other year early on in your wealth building journey. Mortgage lenders, get an understanding how mortgage loans work. In addition to that, what terms lead you to be in the best position to have a mortgage. Also accountants, if you need to, especially if you're going to be an entrepreneur at some point, accountants will help you understand how business finances work as well. The third tip is learning to budget, or learning to have a spending plan. This is crazy important. Why? Because it leads you to one of the biggest rules in personal finance. Don't let your expenses exceed your income. If you're living above your means and your expenses exceed your incomes, it is very hard to build wealth over the long term. It's very hard to save for basic necessities. If your expenses are too high, for example, in your housing or rent, that leads you to have a very hard time to make progress in your financial journey. So learning to budget and learning to have a spending plan early on is huge. It really pays for itself over the long term. And it'll sometimes help you get motivated to figure out what you need to do if you're not making a lot of headway on achieving your financial goals. Sometimes there are certain phases in your life you may have to take on a second job. That's happened. Hey, I've done it more than once, right? And then sometimes it just lets you know, hey, you know what? We're in a better position than we thought we were. But you got to budget consistently. When we coach people, we tell them budget every single paycheck. Have a plan for your paycheck every single time you get paid. But again, number 3, great call out, learning to budget and have a spending plan. Number 4, love this one, start an emergency fund. Starting an emergency fund is very important. And that's why the number 3 tip was important as well, because once you have a spending plan and you know exactly what your expenses are, then you start to build an emergency fund. And you know exactly how much you need in your emergency fund. A lot of times when people are deeply in debt, we tell people they either have at least 1,000 or even 1 month of expenses, depending on their life situation. Then from there, progressing over time, you want to build it up to 3 months or even 6 months. And where do you put that money? You don't keep it in your checking account. You don't keep it readily available. A lot of times, the best move is either keep it at a savings account within the same bank that you have your checking, or put it in a different institution, a different bank, and put it in a high-yield savings account. A high-yield savings account is going to make more money over time. Yes, it's going to grow a little faster, but it's not intended to grow to the rate like your 401k or your Roth IRA, things like that. But that emergency fund is crazy important, because emergencies will pop up along your financial journey. That is a guarantee. Emergencies will pop up. And when you have that emergency fund, what do you end up doing? You dip into your emergency fund. You pay for the issue that is driving it. Then you know, because you have a good budget, you rebuild it. Instead of, when you have an emergency, having no choice but to hit a credit card, or those homeowners, no choice but to do a HELOC. Frankly, for every homeowner, I would love for all the homeowners that are watching this to be in a position that they never need to go create a HELOC unless they need to pay for a roof, something massively expensive that your emergency fund may not be able to cover. So again, an emergency fund is so important to helping you on your wealth building journey. The number 5 tip, save for retirement as quickly as possible, as early as possible. And when you're doing that, do what you can to get up to the point where you can maximize that employer match. So sometimes your your 401k will have a plan match that says if you invest 5%, they'll match you a total 5% as well. Sometimes it's 3%, whatever it may be. But as soon as you can get in the habit of saving for retirement, it really, really adds up over time. It'll help you. In fact, we've done some videos that show that difference and a balance if you wait just 5 years. And if you do that, if you check that video out, we'll put it in the show notes. You check that out, you will see examples of exactly why it's so important to save as early as possible. Now, I get it. Sometimes you're in a position that you're not bringing enough in, but you're not going to know that until you do that good spending plan. And so once you have that, you'll have a good idea of if you can start saving for retirement right away. And if you can't, you know what? Don't beat yourself up for it, but do something about it. Work hard to pay off those debts so you can put yourself in a position to save for retirement. Work hard to make sure you have an emergency fund so you never have to sit there and stop doing retirement savings. And if you're early on in your career, do the best you can. Keep working to get those promotions or even moving on to companies 2-3 years after, whenever you're more comfortable moving on to another company. That will help you be in the best position to save for retirement as early as possible. And this really adds up over time because you have money invested as early as possible. You're giving that time for compounding interest to really help you over the long term. And again, that's whether it be a 401k, so it's employer, or a self-employed 401k, or even an IRA. That time of saving for retirement, every year counts. So the earlier you can get to doing it and the longer you can do it, the more that money is going to build up over time. The number 6 item, monitor your taxes. And I have to completely agree, especially for you self-employed individuals watching this. You've got to pay your quarterly taxes. You've got to pay those taxes. There are many online tax calculators out there. You could even go to the IRS website. That's great tax calculators as well. But this one's a big call out for those people that have variable incomes or are highly commission based. They get a big, huge commission at the end of the year. You've got to make sure that you have the right withdrawals happening of taxes. And if you don't, set aside some money from that big, beautiful bonus that you got and then be ready to pay those taxes. You don't want to find yourself that you spent all of that bonus money or you spent all your money and then you have this big, huge tax bill that you have to pay. Yes, the IRS will put you on a payment plan and that's great. But you have to know that they are charging you interest that you can't even deduct. I'll say this right now. The only interest that we want you to have, future millionaires, is interest of growth interest. So that's interest on your compounding interest on your high yield savings account, interest on your investments in your 401k, interest on your investments in your IRA, interest in your brokerage accounts, interest in your kids' 529 plans. These are the best places to have interest. We don't want you paying any interest. And now if you have some mortgage interest, you have to sit there and recognize how long that's going to be for you, right? A lot of times we recommend, if you can, try to pay off that mortgage early, put some little bits of extra on the principal to pay it off a little earlier, because at a certain point, your interest will be so low in your mortgage, you won't be able to even write it off on your taxes. So what's the point of paying interest that you can't even write off on your taxes? So again, monitor your taxes. Monitor your taxes. Make sure you know what you're paying the right amount, both federal and state. And for you people who work in multiple states, please tax plan. Multi-states will catch up to you. Please, please, please make estimate payments. So the 7th item that this article calls out is guard your health. Make sure you have adequate health insurance given your lifestyle and given the phase of life you're in. So, if you're single, you may not need such broad coverage. Young and single, you may not need such broad coverage. But as you get older, really assess what type of health insurance you need to meet your medical needs. And then as you have a family or your life evolves, again, continually assess the health insurance you need. So guarding your health. And then, of course, take care of yourself, right? Because what's the point of all this saving and planning if you get to your retirement years and you're done? Your body's just done. Have some fun along the way, but really guard your health over the long term. Health insurance costs that change over time, and make sure you have the right health insurance costs so you don't get hit with big medical bills. The 8th and final item brought up in this article is having insurance, having things to protect your wealth. So that includes insurance that could be renter's insurance, disability insurance, car insurance, you got to have the adequate amount of insurance, enough insurance to cover where you currently are in life. And as you get older, this gets a little more complicated because your factors of life get more complicated. That's okay. This is you maturing. But also think about that health insurance. When you're young, you may be fine with the basic plan. But as life evolves, please keep in mind, life evolves, your insurance needs may evolve. And a lot of these things are really not that expensive, and particularly that renter's insurance. That renter's insurance is extremely cheap as an overall. Please also consider having life insurance as your life evolves, as when you have dependents, when you have a wife, when you're married or you have children, or someone loved one that you are tending to. Life insurance is very helpful too. That way, if something were to happen to you, that money goes directly to them as long as you list them as the beneficiary, and it is tax-free. And I don't think everyone knows that basically life insurance premiums, the amount that is on the value of the policy. And when you're younger, these policies are super cheap. So really consider that. But the value of these policies, the beneficiary, it is non-taxable income most of the time. I'm sure there are certain circumstances where they are, so I'm not going to say 100%, but most of the time, a life insurance premium, it is tax-free to the beneficiary. And so this is a great way to just show some love and care. Should something happen to you, that life insurance policy kicks in and your beneficiary gets to use that money to help cover their life. So now let's just do a quick recap one more time. 8 financial tips for young adults early in their careers. First up, pay with cash as much as possible, not credit. Don't build up credit card balances. This comes back to bite you. Again, the interest rate on credit cards is extremely high. Number 2, educate yourself financially. Read some books. Listen to podcasts. Take a course. A lot of these things are very inexpensive, but the benefits of learning these things early on is huge. Now, number 3, learn to budget or learn to live on a spending plan. And overall, learn to live on less than you make and invest the difference. Or save the difference to build up an emergency fund, and then from there, invest the difference. Number 4, one more time, have an emergency fund. Start an emergency fund, protect it, let it grow in a high yield savings or a money market account, and then only utilize it in a true emergency. This is huge. These are the first 4 items. The number 5 item, start saving for retirement as quickly as possible. Get there, and when you finally do get there, over time when you get raises, increase that amount. Get to the point, first off, your first tier goal is get to the point when you're getting the complete match from your employer. Then from there, if you want to go higher because you like the way the investments are structured, the opportunities that you have within your 401k, go for it. In addition to that, start saving in your IRA, in an individual retirement account, and then also in a brokerage account if you want. And number 6, monitor those taxes. This is really important, especially for those individuals who have highly variable incomes. Now, people doing contract work or 1099 work, make sure you do estimate payments. You could do a lot of this online. There are very good basic calculators available both via the IRS and various websites. Usually go for like a payroll company. Payroll companies have great online calculators. Why? Because that's the product that they sell. They sell the product of payroll services. So their calculators are like 99% accurate. It's a great way to make sure you have a good idea of your taxes. Number 7, guard your health. Take care of yourself. There's no point in doing all this saving if years from now, when you finally when you're able to retire, whether you retire early or you retire at a more traditional time around Social Security time, if your body's completely shot. So guard your health. Take care of yourself along the way. Have some fun, of course, right? But take care of yourself. And number 8, the final item, protect your wealth. And really, the article calls out when you're protecting yourself, this is through various insurances. This can be renter's insurance, disability insurance, life insurance, especially this is important as your life gets more complicated and you have dependents. So I hope you enjoyed this article review. 8 amazing tips for young adults or young people in their careers. Take advantage of these tips. Attack them as quickly as possible. And you know what? If you think we missed something, please drop a comment. Let us know if you think we missed something. Drop a comment. We would love to add to this list. I always do videos all the time, every now and then, with bonus tips. So please drop an extra comment if you see that we've missed something. Hey, thanks for staying to the end. This video is brought to you by the Next Chapter team. If you enjoyed the video, please drop a comment. Please also like, subscribe, and share for your friends and family. This will help the channel reach out to more people just like you. We offer one-on-one coaching where we work with everyday people to determine a clear path to achieving their financial goals. This includes things like budgeting to reduce debts, planning for big purchases, and even learning how to build wealth with the tools that you have readily available to you. If you're interested, please see our link below to schedule a free call with our team. That's right, it's a free 30-minute call with the team. Also, check out our affiliate links for High Yield Savings Account. This is a great place for the saving up for those big purchases and your emergency fund. Thanks, and see you in the next video.